Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And today I want to talk to you a little bit about second quarter earnings. They'll be coming out very shortly. Those of you who are novices may not know that earnings are the profits of a company, sometimes called net income, but usually called earnings or earnings per share. And they give you an idea of whether the company is growing or not, growing sales, growing profits. And the second quarter earnings, quite frankly, are going to be a disaster. And we all know why, because in the second quarter, the economy was shut down and retail sales came to a screeching halt, and people were unable to go out and work and play and spend and shop and travel. And that's going to be reflected in the second quarter earnings. Now, just because they're terrible doesn't mean the stock market's going to roll over. But you know what? Even if the earnings are better than expected or if they're worse than expected, it doesn't really matter to anybody who's a longer term investor because the stock market is really looking out 6 to 9 months, somewhere between late winter and early spring. And the market, when I say the market, I'm talking about the collective intelligence of investors, which is reflected in share prices every day. There are hundreds of millions of investors in the US and around the world buying stocks, and they are taking into account every factor they can think of: inflation, interest rates, energy prices. So all this information is reflected immediately into share prices, but they're looking out 6 to 9 months. In 6 to 9 months from now, things should be much better off than they are now. We know that because we've had massive fiscal stimulus, we've had unprecedented central bank liquidity, we've got ground scraping interest rates. And as far as the coronavirus goes, we're having good success treating COVID patients with antibodies. And three companies, Moderna, Pfizer, and Johnson & Johnson, are now in phase 3 trials of their vaccine. So we will probably have a vaccine at least for emergency authorization this year, and then we'll have more widespread immunization and beyond that herd immunity, and then life will get back to normal. And that's what the stock market is anticipating. Not that things are going to be fantastic tomorrow or that second quarter earnings are going to be so much better than expected, but that 6 to 9 months out, the economy is going to be much closer to normal than it is today. And so that's why the huge run up in stocks, and we've had some volatility along the way too, but the big run up is due to the fact that investors are looking ahead and thinking that the outlook, given all the factors I mentioned, the fiscal stimulus, the central bank actions, low interest rates, low energy prices, and so on, are going to lead to better than expected economic growth and better than expected corporate earnings. And ultimately, share prices follow earnings. Anyway, that's it for today. If you'd like to read more of my comments on the market, I encourage you to sign up for my free e-letter, Liberty Through Wealth. Just click on the link below, and I'll talk to you again soon. Thanks so much.